Bitcoin ETFs recorded a net outflow of $1.039 billion over 5 trading days from May 11 to May 15, 2026. This marked a notable reversal after a 6-week stretch of inflows into the US-listed funds. The outflow came from a combination of investor redemptions and a slowdown in new subscriptions across the full suite of spot Bitcoin ETFs. While the exact distribution of the outflow across issuers remains unclear, the sheer scale of the withdrawal has raised questions about investor sentiment and institutional positioning in the Bitcoin market. The sustained inflow period, which had lasted for weeks, was one of the longest continuous demand stretches for Bitcoin ETFs since their launch in January 2024. The recent outflow broke that streak and signals a potential shift in market dynamics. Investors who had been steadily adding to their Bitcoin ETF holdings may now be reassessing their exposure in light of market conditions or portfolio adjustments. The aggregate net outflow figure is drawn from tracking data that captures the net difference between subscriptions and redemptions across all spot Bitcoin ETF products during the 5-day window. While the exact breakdown of the outflow by fund is not yet confirmed, the billion-dollar scale of the withdrawal is among the largest seen in the ETF's history. This suggests that either a single large issuer experienced significant redemptions, or that the most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Outflow was spread across multiple products, including major ones like BlackRock's IBIT and Fidelity's FBTC. What is confirmed is the total net outflow of $1.039 billion across the 5-day period. What remains unstated is the per-fund breakdown and the daily flow patterns within that window. Without granular data, it is impossible to determine whether the outflow accelerated toward the end of the week or was evenly distributed. This lack of detail makes it difficult to assess the full market implications of the event. The significance of this outflow lies in its timing and magnitude. After a prolonged period of inflows, a sudden withdrawal of over $1 billion could indicate a shift in institutional or retail investor behavior. It could also be a temporary correction rather than a long-term trend. Without more data, it is difficult to determine whether this is a one-off event or the beginning of a broader market adjustment. Investor behavior in Bitcoin ETFs is closely tied to broader market sentiment and macroeconomic factors. If the outflow is driven by a broader shift in risk appetite or a change in regulatory expectations, it could have implications for Bitcoin's price and the overall crypto market. However, if the outflow is driven by a single issuer or a specific market event, its impact may be more limited. The next signal to watch is whether the outflow is followed by a sustained period of redemptions or if the market stabilizes and inflows resume. A return to inflows would suggest that the recent outflow was a temporary correction, while a continuation of outflows could indicate a broader shift in investor sentiment. The key will be to monitor the next few weeks of ETF activity to see whether the May outflow is an isolated event or the start of a new trend. In the absence of issuer-level breakdowns and daily flow data, the market will have to rely on aggregated data to assess the full picture. This means that investors and analysts will need to wait for more. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Detailed reports before drawing firm conclusions about the cause and implications of the outflow. Until then, the focus will be on tracking the next major signals and how they may influence Bitcoin ETF activity in the coming weeks. The Bitcoin ETF market is still in its early stages, and the recent outflow is a reminder of the volatility and uncertainty that can accompany institutional adoption of crypto assets. While the long-term trend has been positive, short-term fluctuations are inevitable as the market continues to evolve. The next few weeks will be critical in determining whether the May outflow is a temporary setback or a sign of a more significant shift in investor behavior.